Hey everyone, welcome back. In a recent video, I talked about what to do when your client gets an IRS notice. Today, let's get a little bit more specific. Here are the 6 notices you'll most likely encounter and what each one means. Number 1 is the CP2000. This is the most common notice your clients will receive. It means the IRS compared the information on the return to the information reported by third parties, like employers and banks, and found a mismatch. Maybe a 1099 wasn't included on the return. Maybe an amount was entered incorrectly. The notice proposes changes and shows the additional tax owed. If the IRS is right, the client can agree and pay. If they're wrong, you respond with documentation showing why. Number 2 is a CP501. This is a first reminder that the client has an unpaid balance. It's essentially a friendly nudge. You owe us money, please pay by this date. It's not aggressive, but it shouldn't be ignored because the next notices escalate quickly. Number 3 is a CP503. This is a second reminder. Same message, slightly more urgent tone. The IRS is telling the client that they still haven't paid and they need to act. Number 4 is the CP504. This is the one that gets people's attention. It's a notice of intent to levy. The IRS is telling the client they will seize assets, including bank accounts and state tax refunds, if the balance isn't resolved. This notice has real teeth. If your client gets a CP504, they need to act immediately, either by paying, setting up a payment plan, or contacting a professional who handles IRS collections. Number 5 is the Letter 525 or LT 566. These are examination notices. The IRS is auditing the return. It will specify which item on the return are being examined and what documentation the client needs to provide. This is where you refer a representative. As a PTAN-only preparer, your authority to represent the client in an audit is limited to the return you prepared, and even then, an experienced representative will get a better outcome. Number 6 is the CP14. This is the initial balance due notice. The client filed their return, showed a balance owed, but didn't pay it in full. The CP14 tells them the amount due plus interest and any penalties. If the client can pay it, they should. If they can't, they need to look into an installment agreement before it escalates to CP501 and beyond. Know these 6 and you'll be prepared for the vast majority of IRS correspondence your clients will receive. For training that covers this and every other situation you'll face, visit MuseSpring.com. As a quick reminder, everything on this channel is educational and provided through MuseSpring for informational purposes only. Thanks everyone, I'll see you in the next one.